22nd of October, 3:13 p.m. UK time. Now, I typically just do the analysis depending on if I've got the morning available in the morning, spanning from how the market is set up as of 7 in the morning, across the time frames that I incorporate in my arsenal, or in other words, in the array of time frames that I consider. Now, I also look to trade. I will also look to trade 3 p.m. About 3 p.m. to 5 p.m. UK time. I'll probably cut it off at about 5. It's getting a bit late. After that, technically it's 5 to 6. It's 3 to 6, but you know, I think I'll just leave it at 5. Not gonna lie. But I also conduct the same exact approach. So I just thought I'd do that today. I do have Tom Howgard live on too. So if you hear him in the background, then that's what it is. Because when I'm doing my work in the afternoon, I usually have music on, or have Tom's live on if he's live. So it might be a bit distracting. So actually, I think I'll turn him down a bit. But yeah. So I started on the daily because I had already been on the time frames because I would have already conducted the analysis in the morning. But as of the most recent as of the most recent daily bar close prior to the bar that's currently in play, how the market's set up in regards of the at-hand push relative to the daily chart, we see it's very overextended to the downside. In fact, so the overall key high was like this range, this low high was broke past here, and then you had at-hand pushes all over the place, like from like if you just follow my cursor, and then the at-hand push range low was broke here, and then the market continually kept breaking lower, just progressively, like literally progressive overload to the downside. And yeah, it just kept extending lower, but relative to next step higher time frames, it made sense to do so. But I'll just quickly do the analysis and I'll go back to the high time frames of how like this actually made sense, because you must have the reality of the prices you're trading at across all time frame chart perspectives, and relative to, for example, 4-day time periods, meaning the in-play bars would run over 4-day time periods, meaning whatever momentum was set to prevail relative to the 4-day subsequent in-play bar is likely to take hold over a 4-day time duration. Now, in this case, I've been calling this the whole week, but in this case, it was likely that the market kept pushing lower relative to 4-day time frame chart perspective. Therefore, likely to primarily push lower over 4-day time period. And it was quite heavy, in fact. And so that's how we see there's literally been no retracements. But anyway, as of the most recent daily bar close, which is also applicable to European and morning trading session, the market was set up bearish based on the previous bar close, how it formed the way it did. Now, it's probably likely that this low is going to be probed, meaning explored, meaning like the prices the market is sat trading at as of the most recent bar, as of the subsequent bar open prior to the bar we're seeing here, the prices that are available and contracts placed on the bid and offer, how they're likely to be interacted with based on how the daily chart's perspective is set up as of now, and therefore how they're likely to be interacted with over the subsequent daily bar time period, is likely to result in the market being like is likely to result in market movement gradually like pushing lower basically. And then if we go back to the 12-hour recent bar close prior to the bar that's in play, this bar closes at 11, I think. And anyway, yeah, it's still set up nice to go bearish. So basically, I'll just look at for the afternoon session. I do look at, like, for example, the weekly again if I want to, the 4-day, the 3-day, the 2-day. But primarily, I focus on the daily 12-hour, 8, the 7, the 4, the 2, and then obviously the 1. And then just see the most recent bar closes prior to the time period I'm looking to trade. For example, in this case, 3 to 5. It can be 6. There's no lock off, specifically why. It's just, you want to have a decent time window centered around a particular key time period to determine how the market's set up, and therefore how the market's likely to primarily push in over that time period based on the structure of the market relative to timeframes top down. Now, anyway, the daily was bearish. The 12-hour is also bearish. If we drop down to the 8-hour, you've got a bar that closes at 3. This is also why I structured it around 3, so I can use the 8-hour because this is a really good time frame chart perspective to look at when you're looking at intraday, like intraday time segments of like determining like how the market's likely to head in. If you've got other time frames that you're incorporating into your to be analyzed time frames too. So anyway, as of the most recent bar close prior to 3 o'clock, you've got a very strong bearish 8-hour bar close. Now, if you zoom out a bit, like this push is angle too from here to here is not it's not done pushing yet. It's um okay. So I was just sorry. I was just listening to Tom. He's done. Um. So yeah, it's very likely that these like around about these lows get tested. I would bet on them being breached. To be fair, um, but obviously that's subject to whether there are market participants willing to take the necessary actions what are required to be took with regard to pairing up with the best bid and offer. There's contracts placed on the best bid and offer in the particular fashion that would therefore what that would facilitate the price actually ticking past that level, which requires there to be market participants to take those actions. So it's unknown, but based on the structure and how the subsequent bar is likely to pan out, and then also higher time frames, it is, in my opinion, it's likely that these lows get took out. So, and at the end of the day, it's got nothing to do with opinions. It's based on structure because at the end of the day, what good is it having an opinion on how participants are likely to act? Because at the end of the day, you don't know. So, um, anyway, yeah, 8 hours bearish too. So 12 daily, 8 are bearish. Now this bar closes at 1, so it's a bit behind, but the 12-hour bar we'll look at. Of course, that encapsulates the subsequent 12-hour time period, and so does this. This encapsulates a sufficient time period too, so it is worth analysing. So anyway, yeah, we see it close bearish. It's likely that these lows get traded past. I'm pretty sure, yeah, they have, as I don't have the ticker. Um, but yeah, so the market's exploring new probing below new lows, but based on higher time frames that we've analysed already, it's likely that the momentum keeps prevailing lower to around this area. And then you would basically then reassess how the market's set up in this area and then reassess slash re-gauge how each time frame chart perspectives at hand push being analysed or relative at hand push is set up structure wise, and then how that structure of that at hand push compares to the previous range of structure, and where amongst that previous range structure is that at hand push unfolding at the way it is in regard of how it's formed. Now, anyway, the 4 hour bar closes at 3. If I just zoom in, you see again, it closed very nicely to keep pushing lower. Yes, I'm aware it's right at the very lowest, but you also have to consider how high time frames are set up too. So it is likely to keep pushing lower. If you then just jump to the 2 hour, I don't look at the 3. I'm pretty sure the 3 hour bar closed at 4 something. I guess we can just quickly look. So this bar closes at 2, so I guess you could look at it because it's the yeah, I guess you could look at it, but yeah, anyway, bearish. 2 hour, this bar closes at 3. So how the market set up as of 3 o'clock in regards to the push structure and angle. And remember, the angle is formulated slash comprised of how nearby bars close, thus contributing to the angle the push is pushing in. And this, I mean, it's kind of a non-sufficient kind of quantity push and angle. Looks good to keep pushing lower. But I am aware we are sat right at the very lows, but I am also aware of how high time frames are set up, leading to my opinion that we're still headed lower. So, and as of this bar close, it is also likely to be the case too. And then the 1 hour is the time frame that we look at how it's set up as of the key time period we're looking to trade. I mean, in this case, 3 to 5. That's still a decent amount of hours. And then we assess how the situation at hand with regard to how the 1 hour chart perspective is currently set up, and how would be the most appropriate way to see it set up, like to go on side with the direction we've established, from then dropping to the 1 hour that's likely to prevail over 3 to 5 time period, which is downside. And then how the 1 hour chart perspective set up is we see it's sat right at the very lows of in a hand push to the downside. Which his structure isn't that sufficient, to be fair. And the angle is still kind of pointed lower, but it's kind of iffy because we're literally trading right below this nice low, these lows too, and like just the overall lows of the like in frame chart perspective, right? Meaning like from here to here. And then overall push wise, I mean, it's kind of a non-sufficient candle quantity overall push too, because if you look at the candle quantity of these overall pushes compared to this overall push, like it's not that clean. Yes, we're trading below lows, but how is the push structured? It's still kind of pointed for lower. Now, I do look at how the 1 hour chart is likely to pan out, but remember, I kind of go off based off the subsequent in-play bar. And the subsequent in-play bar, relative to 1 hour chart perspective, only encapsulates a 1 hour time period. So the 1 hour time period is pretty much just the time period. I look to assess what would be the most appropriate way to see it set up, like to go on side with the higher time frame direction, which I've established is downside. So like I marked up, I would want to see the market retrace from the lows that sat of the at hand push to the 1 hour at hand optimal trading range region, and I would only need to see a 15M nice bar close. If once the market is traded to here, I said if once the market is traded to this region, and that would be sufficient enough for me to then look to get positioned in a short. But I'm not looking to trade 3 to 5 today because I had the morning. So yeah, so it just depends on what times I've got available, really. But yeah, so and by a nice 1 hour bar close, it could just literally be something like this. So if I just like hang on, I'll just draw it. So you trade into this region. You got a wick like this, and then you got like a nicer wick at the top side. It's like a wick reject. It still closes bullish. That's okay for a first initial intent exhibit of the day bar close. I know it's a fancy term, but it's just what I refer to. Like they don't have to be anatomic bar closes, but just they're okay for like under certain circumstances. And then basically what I'd look for is a simple sufficient anatomic 15M bar close. So that could also happen to form on the first like nice bar close that forms, because what could happen is this: the market just keeps pushing in, probing into this region, probing in, and then you get a nice in-play bar that wicks up, wicks the high, and then closes like this at the lows, and then obviously leaves the nice wick like that, and then bam, you've got a nice playable range relative to 15M time frame, which I presume would also be okay on the 1 hour, at least short term. And then you can just go short, and then I'd probably have my stop loss depending on, well, if it literally did form like this, I would just measure it up, see what 10 pips first looks like, and hang on. Okay, so 10 pips looks like this, so I'd probably go for, and then I'd line up 15. Yeah, I would just look to cover around this region. So I'd look to cover about there-ish. So yeah, if literally that happens to fall right bang on 15 pips, and I'd look for something like that. So that's exactly what I'd be looking for today's North American morning session for euro dollar, and it'd be the same for the pound, the same exact analysis.